If you're a first-time home buyer, you're not going to want to miss this video. This week, I'm going to talk to you about the appraisal process. When you're buying a house, you're getting a mortgage, you're going to have to get an appraisal done. And that's an important component of getting the mortgage commitment. So stick around for this one. You're not going to want to miss it. Let's get started. If you've been watching my channel for a while, you've heard me say time and time again over the past several months about homes not appraising and what happens if the appraisal comes in low. And then I realized there's a lot of first-time buyers out there that don't really understand the appraisal process. So I thought I would make a video today to touch on that subject and explain to you what the appraisal is, what's done for the appraisal, and what happens if it does appraise or if it doesn't appraise. By the way, I'm Jackie Baker, your local realtor serving the beautiful Bergen County area, and I'm with Coldwell Banker Realty. I really appreciate you being here, and if you're new, you might want to subscribe because I talk about all things real estate and all things about Bergen County. And also while you're at it, if you like this content today, make sure you hit that like button. Thanks. So the appraisal is a part of the mortgage process, and what it is, it's the bank needs to determine that the house you're buying, that price you're paying, is along the lines of the current market value in the town that you're buying. So what does that mean? First of all, they're going to look at comps or comparables. So if you're buying a 3-bedroom, 2-bath colonial, they're going to go search the area, preferably in a 1-mile radius, all right, from the surrounding radius of the house you're buying. They're going to look for other homes that have sold within the past 6 months. Sometimes they'll look 3 months, but say 3 to 6 months. They're going to go back and look to see what other homes have sold that are similar to the one that you're buying, and to see what those homes sold for, what was their selling price. That's the first thing they're going to look at. Next, they're going to come out and they're going to physically look at the property. They're going to go visit the house that you're buying. They're going to do a visual inspection of the house. They're going to take pictures. They're going to look for any upgrades, if there's a new kitchen, new bathrooms. They're also going to look to see if there's any serious damage to the house. They're also going to measure the house to make sure the square footage is correct. They literally will go room to room and measure the size of the rooms to make sure they have the proper square footage, matches the comparables that they were looking at to determine your home's value. Now, once that's done, the appraiser comes out. It spends about maybe 20 minutes looking at the property, takes pictures of the outside, the inside. It takes a couple of days for them to produce their report. And so one of two things are going to happen. The report's going to come back and it's either going to say it appraised for the price that you're purchasing it for. It could over-appraise, which is awesome. My God, I've seen that happen twice in my career. Oh my God, it was amazing. Or the house could under-appraise, and we got a problem. So this is what I've been talking about a lot lately, and I think this is important for first-time buyers to understand this. Now, if the house does underappraise, say you're paying $400,000 for the house and it appraised for say $375,000. Oh my God, what happens? Well, I'll tell you what happens. There are several things. So if that appraiser came back and said the house is worth $375,000, you can go back to the seller and try to renegotiate the price. Now, if you have a decent seller, they may be willing to maybe not go down to $375,000, but maybe meet you in the middle, okay, to renegotiate that price. The other thing that you can do, if they're not going to renegotiate, the bank is going to ask you to put more money down. So what you're doing is you're covering that gap from between $375,000 and $400,000. So you got to come up with another $25,000 to put down, because the bank only going to mortgage what the appraised value is. They're not going to give you a mortgage based on $400,000. It's only going to be a mortgage based on $375,000. If you have the extra money, it's your next thing you're going to have to do. Another thing the banks may offer to you is you may have to pay private mortgage insurance, or what's known as a PMI. That's an additional payment on top of your mortgage payment. You'll have to pay that for several years. That's another option. I recently had that with somebody, one of my clients, the house underappraised, but he wanted to move forward with the transaction. He ended up having to get the PMI, and he's going to be paying an additional, $100 a month for maybe 4 years or something like that. So that's an option too. If you decide you don't want to do these things, you can't negotiate the price, you don't have the money to come up to cover that gap, you can walk away. If you feel the house is, it comes back under appraised, you feel like you're overpaying for that house and you can't come to terms with the seller and negotiating a price, you have the right to walk away from that. As hard as that is an option. So these appraisals are done really to protect the lender. They're loaning you hundreds of thousands of dollars, so they want to make sure that the house you're buying is actually worth what you're paying for. I guess I would say it's like part of their due diligence, that they want to make sure that they're loaning you the right amount of money. And listen, don't be surprised if your appraisal does come back low. I've talked about this before in other videos. It's happened. It's getting better now. Last year in 2020, we were seeing it a lot because prices suddenly skyrocketed because of the low inventory and people were just bidding tens of thousands of dollars over asking price. So what happened is the appraisals for a period of time weren't caught up with the market. Say in September, somebody was buying a house and they paid $20,000 over asking, okay? The appraisal came back not at $20,000 over asking. Why? Because then when they went back 6 months, back to March, the market wasn't like that yet. The prices hadn't gone up yet. So they were looking at a totally different market, different price point. So that's why the houses were under appraising. Now, fast forward, we're here in March of 2021, we're not seeing that so much anymore because we've seen the price increases for a while now. Now when the appraisers go back and look at the comps and they go back 6 months, the prices are more in line with each other. So it's rare to see the under appraisals these days. Now that you've learned all about appraisals, make sure you check out my playlist right over here about buying a home. And if you're a first-time buyer, you're definitely going to want to watch this. There's a lot of great information here, so be sure to check that out. Thank you so much for watching me today. I am Jackie Baker with Coldwell Banker Realty, and I will see you next time.